Hey folks, and welcome to the Pipnotic Symposium for the 8th of January 2019. This is the first symposium in the new year for 2019. Isn't that amazing? 2019. How exciting. Sorry for the delay in getting these out. I've been up to my eyeballs traveling and moving and stuff like that. But now we're pretty much settled in an incredible new home, even deeper in the jungle than we were fur. And now, yeah, things are slowly slowing down, which is really, really nice. I've been super busy doing visa stuff for the children and for ourselves, so we had to do a bit of traveling and visit embassies and stuff, so I wasn't really in front of the computer that much, hence my absence in the chat rooms. Yeah, so but let's get to it. Just a quick agenda for today. Pipnotic updates, market crashes, we're going to talk about that. We're going to have a look at analysis and then discuss the most important thing about trading, which we'll cover here in the last section. So Pipnotic update, what's going on? Well, due to the fact that I've left Europe and now we're living in Indonesia, I'm moving the company to Malaysia in the Labuan Islands, and I'm doing this because corporate tax is very low, but also VAT, GST, and all the other consumer taxes are very low as well, actually non-existent. And so by moving the company there, then you guys will not have to pay any kind of tax, which is really nice and very attractive. Because I mean, VAT in Europe is really expensive. In Denmark, I think you pay, well, I know that we pay 25%, which is silly. So by strategically putting the company in offshore in the Labuan Islands, and we can take advantage of these really nice perks. And I have recently given a small slice of the company to my tax attorney, which is really nice because he's a leading tax attorney in Denmark, and a very close friend of mine. So I asked him to do this, and so we've been talking about what would be beneficial and stuff like that, and so he suggested that that we look at something like this, which is marvelous. Okay, so that is in the works. I'm still waiting on some paperwork, but that should be sorted pretty soon. The next point here, we have automated order entry utilities. When I talk about this, I'm referring to the algo trading projects that I have, so Pools and Sudema. And the reason I call these automated order entry utilities is because after spending some time or last month on the Pools channel, I've noticed that a lot of people have been really exposing themselves to a lot of risk. They flick on the robot, as it's often referred to, and they kind of cross their fingers and hope that their account is doubled every week, which is really unrealistic and quite sad and very risky. And so I just want to kind of realign expectations with these projects. Essentially, the Pools utility and the Sudema utility, they're tools that we use to put orders at areas where we can expect price to react. You can either leave the orders where they are, or you can use the entry levels as kind of a foundation or a starting point for your further analysis. And the further analysis is based on the material that we cover at Pipnotic. And I really hope that you guys are maybe taking the information that we provide and using it to quote unquote learn how to fish, instead of hoping that the robot is going to give you a fish a day. While it can do that, I mean, I've been following a lot of the activity, and I got really kind of upset about how it was people were using the robot on the really small time frames and the 1 minute time frame, and that's just that's crazy, because the robot is going to be looking at calculating position sizes based on volatility, which on the 1 minute chart isn't a lot. And so it's too high risk. And so eventually I'm thinking about phasing out these smaller time frame settings, just to help kind of move everyone up to a level that is more responsible and more realistic for trading. I don't know anybody who's trading on the 1 minute chart and is doing so professionally. Of course they exist, but I don't know any. I mean, the guy that taught me how to trade, he's looking at the weekly the monthly and the daily and the 4 hour, and then he's taking entries typically on the hour or even the 15-minute chart. But he's not looking at the 1-minute chart or tick charts. It's just too risky. And so I'm really hoping via the new launch of the Pools automated trading utility that we can kind of realign expectations, and we can kind of bring everyone back down to a mutual level where we kind of understand what's going on. Yeah, so that's that. Okay, then we have a Pools update. Yeah, Elijah asked to leave the Pools area. There was some miscommunication, and I just felt that it'd probably be a good idea if we went our separate ways, which is great. So Elijah is operating in his own channel, the Forex Fitness, and I'm no longer a part of that. I left his server just so that I could focus on Pipnotic stuff, where we trade the same way that we preach, and this is supply and demand, proper risk management and stuff like that. This is really important to me. I have asked Volker from Germany to help administer the Pools project, which he has kindly agreed to do so, which I'm super thrilled about. Volker is probably one of my oldest customers at Pipnotic. He's been around for a long time, many years, and he knows very well what he's doing. He understands currency strength very well. He understands supply and demand, and so he gets it. And he's also moving to a professional trading career, and so this is the guys who's also kind of doing things, which I like, and he's pragmatic, he's realistic, he's not looking in his driveway every morning for a new Ferrari. He's in the currency trading as a business and not for a kind of a quick win. He's in there. He wants to stay in the game for a long time, and so risk management to Volker is really important, as it is for me. And so I feel that Volker and myself are much more aligned, which is also why I've asked Volker to help out with the Pools project. Goodie. Okay, let's move on now to market crashes. There was a lot of discussion about market crash here these past days, and let's have a quick look. Let's go to the 5-minute chart. Then afterwards we're going to go to the Aussie yen. Where are you? It's there somewhere. There it is. Let's go here on the 5-minute chart and let's have a look what happened the other day. So we had this. So people on this time frame are thinking, oh my god, the market crashed. It moved 550 pips in about 10 minutes. It's a market crash. Well, my simple response to this is that it is not a market crash at all. And so it's important that people understand that this is going to happen all the time. Okay, this is going to happen all the time, and there is a risk that this is going to happen every day. While it doesn't happen, because the markets tend to be generally a pretty stable environment, we are always at risk of this happening. And this has happened there, and it's going to happen again. We don't know when, but it's going to happen. But it's not a market crash. It's simply the way the market moves. There is news that comes out either on the yen side or the Aussie side. This is going to create liquidity voids, which means that no one is buying and selling anywhere around current price. What does that mean? That means that price has to travel great distances to find, in this case, buyers. Or in a situation where price is moving higher, price is going to find sellers. And if we have a look at the dollar, Japanese yen, we'll see the same thing. Let me go to a bigger time frame. Sorry, there we are. And so price traveled all the way from here down to here. which was 850 pips. I mean, that's a lot of pips, obviously, but it's not unnormal. You can see here, do we have any demand in here? We have nothing. We have absolutely no demand in here on the greater time frames. We have a little bit down here, but there's nothing in here at all, so you shouldn't even be considering to buy for a price any more expensive than this retracement. Okay, and if you look down here, the next level below this, did that work? Yes, I mean, there's nothing in here. The only level below this is down here. Okay, this is the next level here. Okay, and if we look at this area here, we have the green candle that left, and we have, let me zoom in a little bit, we have the really nice pattern. Price comes down, it comes up, we accumulate and we leave. So this here is marking another area which is important to us. You mark this one off, because this, oops, this is, you see the green candle, the low of this candle is telling us where the edge of a buy area is. This is another edge of a buy area, this is another edge of a buy area here. And so if we move this down, let me move in so we're precise, to the low of here. Okay, I mean, this lines up very nicely with our little pattern here. So if we draw this in here, I mean, this is where price went to pretty clearly. If we would have been trading at this one here, we would have been stopped out. If we would have been trading at this one here, we may have survived. If we would have been trading at this one here, we would have done just fine, actually very, very well. The only difference is that if you consider for a moment this move here, the origin of this move is down here. So this is a likely place that price is going to react. This stuff in here, this is lower probability. We've done this before many times. Let me draw it, where we mark off like a scale like this, and this is like if we grade these, here's a 50%. This is like a 50% chance of it working out. This is like a 10% chance of it working out. And while there's no such thing as a 100%, let's say this is an 80% chance of this working out down here. Okay. If you're trading at the top of this move here, I mean, you might as well give your money away. It's not a good idea, but if you're focusing on the origin of these moves, this is the origin of this move. Okay, so the lower price moves, the higher the probability that we're going to see a bounce. Why? Because last time price was down here, we moved higher. So when price comes down around this area here and lower, so from here and lower, we have a very high likelihood that we're going to see some people begin to start to buy. This was a good price, we can see that. So this price and lower are pretty good areas that people are going to start to buy. Okay, and so trading up here is not a good idea. So was this a market crash? Well, price moved a lot, but was this a market crash? You know, we see these all the time. We see these all the time. Was this a market crash here? Was this a market crash? Was this a market crash? And while these are smaller, relative to this one here, this was just a big liquidity void, so price had to travel a little bit further to find liquidity required to attract buyers, which was at an area of demand. And we know this is demand because if we focus on what's going on, okay, so we have, this is a nice area here. We have an area here. Tested once, twice, it's gone. The area that tested it, the origin of the area that tested it is this one here. Price came to this is gone. The origin of this move that took out this here is down here. It was tested. Price went through it. This is the area that did it. Parent, child, why? Because this is reacting to this. Mark off the whole area. Test. It's almost gone through it, but if you look closely, we have something up here. So the ideal thing would be to go like this. Mark off the high like this. Okay. So here we have, you can't see it on this time frame, but on the 4 hour, the 1 hour, this is a very clear parent parent-child relationship. Okay, and so now this is gone. This one did it in here. Let's look at the origin of this. The origin of, I mean, this is the area here that took out. This one, it was tested once, gone. The origin of this move is down here. This one did it, but look at this. This is messy, so you want to focus lower. This is the origin of the move that took out this area, this parent area of supply here. Okay, what does that mean? That means you move the box down here. Higher probability, lower probability. And it's going down as you go up. The higher you go up, it gets smaller and smaller and smaller. 99, 80, 50, 20, and here we're in the 3%, for example. So on this time frame, if you're looking for the trades that you can hold on to, you want to be trading closer to the origin of a major move like this one. Okay, on the smaller time frames, this is different because these moves, this move here, will look different on the 1 hour or the half an hour chart. And so you're going to have to do the same thing for the swings on the 1 hour or the 5 minute or whatever, but you have to know where you are in relation to the big time frames. So again, was this a market crash? I don't think it was. To me, it wasn't a market crash. As a matter of fact, all the trades that the Pulls robot put on, none of them got stopped out, and they all had stop losses in the market. Okay, none of them got stopped out. You just have to have the stop loss far enough away from the entry to ensure that price can find the opposing side of the market, those pools of liquidity that are required in order for price to travel a little bit for you to get a profit. Okay, so just be careful. And again, I know there are you can trade 100, 1,000 different ways. Obviously, I mean, I like to trade one way. I like to know what my risk is before I get into a trade. I like to focus on the big time frames. Okay, that's how I like to trade, and that's how Volker likes to trade. That's how a lot of people that I know like to trade. My mentor, my old mentor, this is how he traded, and this is how he taught me how to trade. But you don't have to trade that way. You can do it a different way. And if you're not using stops, there has to be an equivalent in place. The equivalent could be hedging, for example, which was a fantastic way to ensure that you're not going to get bitten by the market. Not having stops is a very, very bad idea. A good friend of mine was not trading with stops. He grew his account to about $76,000. He was taking on too much risk. As I mentioned, he wasn't using stops. Too much drawdown. At the end, after this quote-unquote market crash happened, or price finding liquidity, his account was down to minus 190 euros. So he lost essentially everything he worked a year long to build. And I just wanted to get down and cry. I felt, because he's such a close friend, I felt that it was my money, and I felt so upset that this happened. But I think this happens to a lot of people. I know a lot of people in these rooms, in these chat rooms, lost a lot of money, and I just feel so terribly sad that this happened, because I wish this wouldn't happen to you. It doesn't have to happen. You just have to do one thing: look at the bigger time frames. It's not rocket science. If you're on the 5-minute chart, I mean, how the hell do you know what's going on in these major time frames? You have no idea. You think, oh, super, this looks like a great area here or down here. You don't know. You don't know that. This is nothing. There's nothing on here that can make me. I will never ever take a trade based on this information alone. Never. I would never sell here, even though it looks like there's a nice area there. I wouldn't even consider it. And why? Because I have not consulted what's going on the higher time frames. You need to know this before you're making trading decisions on the 1 minute or the 5-minute chart. It's so simple. You're on here, you want to make a trade. I know trading is fun. You want some action. If you want action, go to Tivoli, rent a Ferrari and race around a track. Trading should be boring. It should not be used for entertainment. If it's entertainment, then man, do something else, because this is not something that you should be getting entertainment from. For me, I love trading. Why do I love it? I love it because it's a challenge, but I don't find it entertaining. I find it challenging. It's not, yeah. Anyway, I won't rant on anymore. Just please, before you say, okay, this is a great area, do yourself a favor. Go to the weekly chart. Where are we? Should I be selling here? Go to the weekly chart. The lowest, the daily chart. Should you be selling here? Nah, you shouldn't be selling there. Why? Because you have this huge liquidity void here. So what's going to happen? Well, price is likely going to move up to the origin of this before it finds out what it's going to do. And if we do what we just did, like this, we have a new one. We have, let's say, 99 or 98. We have 3. If you're selling down here, you might as well give your money to someone. If you start if you're taking trades that are in this area here, do yourself and an orphanage a favor. Take the money and give it to an orphanage. You shouldn't be trading down here because this is dangerous. It's dangerous. You should be looking above. We have a little area here. Go down to the smaller time frames after you know what's going on and start finding those micro areas of supplies. You should be selling down here. Okay? Okay? Sorry about the rant. I just really want you guys to get this, and I don't want to see anyone lose their accounts. It's so saddening and so tedious, and it really makes me upset, and I get angry as well. So please don't let this happen to you. I know some of you guys have done that. Don't let it happen again. Do yourself a favor. Go on to the bigger time frames. Okay, where is price? I want to sell right here, as we could see on the 5 minute or the 1 minute. Is that a good idea? Probably not a good idea. Why? Because we're in the lower end of this. This is low probability. This is higher probability. Look higher. Ideally, you look at this and you say, okay, this is an area that price reacted historically. Where's the cheapest price that we should look to sell? Where is price retraced to before? It's retraced here. So ideally, you want to be looking higher. And another thing you should notice is that when price left here, we did not move below this. That means that we want to reconsider our short positions, okay? Because price has not consumed this area of demand down here, okay? Does that make sense? I hope it does. I really, really hope it does. Okay. Good. Let's see what else we have. Yes, always know what's going on in the higher time frames. We touched upon that. It's so important. You have to know what's going on in the higher time frames. Otherwise, you're simply trading in the dark. Okay, goody. Analysis. Let's have a look at a few pairs, and we'll have a quick look at the majors to start off with. So before I start, supply and demand is king. Indicators are pretty useless. They're not telling you anything. They're already showing you what has happened, and we've touched upon many times in the past. You need to know what's going on. Let me turn up the microphone on the higher time frames and be able to assess if you should be buying or selling. Supply and demand is king. Okay, let's go and have a look at the Aussie US dollar. What's going on this pair? Sorry, the internet out here is absolutely horrible. You know, we're really far away. We went on the other side of the river, on the other side of the school, and you go to a road and you keep going until you can no longer come, and that's where we are. And it's crazy. I'll put some pictures up in the general room in a minute, and you can see it's pretty crazy where we are. But it's so beautiful and so green, but the internet is pretty bad. So my apologies for that. So if we have a look here. Let's zoom out. What's going on? Okay, we have a lot of stuff that's going on. If you see here on the monthly chart, okay, we have, I'll do this again, 99, 3, you know, should we be selling? Maybe. Where's 50%? It's here. So when price left here, did it go below here? Did it consume supply? No, it hasn't. It absolutely hasn't. What we do have, we have supply here, which was consumed by what? By this here. So this would be an interesting area to sell at, because this consumed this. We know this is demand because price rallied, it accumulated, it went up, we tested, price left from here and went above this, which took out some demand here. So this is interesting. The origin of the move down is up here. So this is a good place to sell, but this is years away. So we want to play on the smaller price swings within this leg, keeping in mind that, I mean, we're really low down, really low down. And if you look at this one, let me clear all these. If you look at this one here now, have this one, 99, 350. Okay, I mean, we have moved really far down, so this is a good place to buy on the monthly time frame. Does that mean it's a good place to sell? Well, I'll let you answer that. So consider the fact that we are kind of moving into monthly demand down here, and we're having, look at this wick, look at the size of the wick on this candle here. I mean, this is showing us that we have a keen interest in buying, so just be really careful when you're selling. Okay, and so take this information with you to the smaller time frames. The pools robot, put a couple of orders in here. Let's have a look. I think these are daily levels. Go to the weekly. So we have a bullish bias at some stage, because we're kind of moving to the lower end. This is a very deep retracement. So price has moved back to the origin of this. This is demand because we managed to move above this area of supply, which took out this one here as we looked at. But look here. Ideally, I mean, if you look at this, this is messy. So you ask yourself the question, okay, so where has price retraced to? It's retraced to here. You see how price came up here. We looked at this one here. We come back once, twice, 3 times. So we have a nice area up here-ish. Right here-ish. We have a better area here. This accumulation candle just here. I like this one better. Why? Because when price came down, I mean, this area of accumulation, you see the white candles, this happened below this area of supply. So price came down, it poked up, we started to accumulate orders to do what? To move price lower. So this is an area that looks interesting, around an 8900 area. This is really far away from price. And so, of course, you can take trades down here, but then you can't hold on to them forever, because they're probably not going to move forever unless something crazy fundamentally happens. And there's a bunch of like political drama at the moment in the US, so I mean the dollar could continue to weaken. But let's have a look, excuse me, on the small time from the daily chart, and have a look, see what this looks like. Patience. I will have the patience of Job after half a year or a year in this current house with this internet. Okay, there we are. So let's have a look here. What do we have? We have price. Again, we can do the whole thing over. Boom, boom, 99, 3. Lower probability, we have around the 50% around here. So that you want to be looking up here. This is, okay, consider that. But at the same time, this is not even focusing on the supply and demand. I mean, we have this area here, which looks okay. We certainly want our stop to go above this, because we do have a parent-child thing going on here. Parent-child, so price went like this. Price left. Where did it retrace to prior? The 0.7625-ish area. But this is okay. I mean, down here, so we could start to look to sell here, because this is also above the 50%. This is in kind of in the beginning like the retracement sell zone. But this is a nice area here as well. But you can see how price kind of went up and down. All this trading up and down, this thins out liquidity. This is a really kind of a nice and efficient move down. There are no like bursts pushing low. We have this one here. We have this one here. But I'd feel more comfortable looking higher. And you can see that if you study this little piece here. You go on the small time frames. Obviously, you're going to find some trades that you can have a closer look at. Cool. But this one here will be managed very aggressively. just here. Okay, good. Let's have a look at the euro US dollar. Okay, euro US dollar, here we have it. Look on the monthly chart, where are we? Okay, so we have this really nice area here, which is not tested yet. But if you consider this for a second, this whole thing, where are we? We're about a 60% retracement around here. Okay. So this is like probably seen some buying. Also, if you look at this, you can see this pin bar right there. You know, I'm going to try and do it using the tool. This is a pullback to an area of a buy zone, and then price left. So let's have a look, see where price came to. Let's zoom in as well. You can see it properly. This one just here. So you mark the low. Look where price came back to. Some of you might think, wow, that's magic. It's not magic at all. It's simply price showing you where you should start to buy. Price rallied, accumulated, rallied. We pulled the slingshot back. This is kind of the edge of the slingshot. The slingshot released from this point, and now this is where you want to. This is the beginning of the buy zone. Didn't even have to look. Price didn't even come back to here. We came to this one here. This is where we saw price depart from. Okay. So we have this area of supply here. If we mark off the edge, zoom in a bit, you can see the edge right there. Move this away so we can see it properly. Kind of like you can kind of see just here, a little bit lower. You can see the high of this. Okay, the green candle, it pulled back, the slingshot was pulled back, and then boom, then it left. Price came back to that area pretty closely. So we'll see what happens, but I'm thinking we've moved above these highs, we've challenged this, and so I mean we need to see price do something else. We do have some pretty strong movements lower like that. We have the major swings going like this. Like this. Where do we have the rectangles? We have them up here and down here. So there's nothing to do in here. There's nothing to do in there. Okay. So keep that in mind. Also notice that in here we have a swing. I mean this is a big deal because this is actually a monthly chart. Same thing. 3%, 99, 50. So the further price comes down into here, the more buying we're going to see. So people are always starting to buy. I'm not looking into here because you can't really see on this chart, but there's probably some buying happening here. This is also a very strong move. Some people are thinking, okay, we're going to get some profits and enter lower. So this is going to happen down here somewhere. We have a pretty nice pullback here, another one pullback here. We have a green candle, pullback started here. This has already happened. This one is happening, and then we have the other one down here. Okay, so we look to the weekly and see what's going on. Ooh, patience, read. Okay, had to pause the film, it got so slow there. Okay, so here you can see that we have this area here, nice continuation pattern. So we had this one here, parent, child. Why? Because this one fed into this one here. So this is the one that's interesting. I think this stopped working because my internet connection was dropped. I'm just recording this. Let me see. Okay. That took about 3 minutes, would you believe it? The internet flying through the coconut trees. Right, so price came down to this weekly area. Fed once. We probably saw some really nice divergence here on the currency strength histogram. Price poked in here a little bit further. We went almost down to the area that the software marked for us, and this is where price is sitting and accumulating. Should we be nervous about holding this position? No. Why? Because this accumulation is happening at demand, and so this is just orders being filled to do what? Well, we don't know, but to likely drive price higher. There's no supply in here until we get up here. We also have price pulled back to around this level here, and we have this up here. And so I think we could certainly begin to accumulate some longer positions down in here, and then get a little bit careful once we get to the highs around here, because this is where price retraced to on the way down. Keep in mind this whole thing that we've discussed. We have, this is on the way down. How far are we? We went beyond the 50%, which means that we're starting to attract people to buy. And also you can do the same thing for this one here. This is about the 50%, so ideally this is the better place to start to sell, which is right around this area just here that we've marked off. Okay, these are just robot trades, just testing, so that you don't have to pay attention to the orders being put in there. But this is kind of the way that you should be thinking. And also notice that, I mean, price is, it's moving up higher. You can see we've moved above all this mess, and we're starting to poke into these areas. We have this one here, parent child, but if you look here we have something here, so this could be like parent child. Price is tested. We have not managed to move below these, and so until that happens we would expect price to move higher, and this is a nice area of demand, so we think, we never know for sure, but potentially a move higher from here up to at least here, and potentially a little bit higher. This place here, this one here, this one here, you see we've already tested once, and then we have something down here as well, and even like a little gap slip just there. So we have a few areas here that look pretty interesting. Good. Let's have a look at the pound US dollar, and I think we'll wrap it up. Also think about like geopolitically what's going on. I don't pay too much attention to the news, but it's nice to have an idea what's going on. And you don't have to be an economist to know that there's a lot of uncertainty around the UK at the moment due to the whole Brexit. But paired with the US dollar, it's kind of a wild card, because the UK is currently as insecure and much of an unknown as the US is because of this drama in the White House, and so this could go any way. So we can expect one thing for sure, and that is volatility, high volatility in the coming weeks. And you can see here that, I mean, price is kind of just moving around sideways. So this is a lot of uncertainty, as you can see very clearly here. So there's a lot of like, what's going to happen? Oh no, shall I sell my house in UK or shall I keep it? What's the exit deal going to look like? So you can see that this is kind of a little bit kind of nerves. That said, look where price reacted. Look at that. Supply and demand, always it's king. So we had this area here, we had a market structure failure where we had kind of we had resistance here, around here. Tested, price rallied, accumulator rallied, tested, pointing to the edge of the area, and it left, and now price poked into the area, and this is where we're leaving from. Okay, so we can expect price to travel a little bit. So we do remember as well this, where are we? Here's 50%. So this is lower probability, this is higher probability. Okay, that said, doesn't mean you can't trade here. It just means that you're going to have to be a little bit more active on the trade management. Okay, we're reacting to weekly demand, and so I mean weekly demand is pretty hefty, and so just be mindful of that. We've got another one down here as well. But this is a nice push higher, but pretty efficient trading. So no like liquidity voids in there. But we have a really big rejection there in this pin bar, as you can see. And so I mean that tells us that like there's a little bit more strength to the upside. And so thin liquidity to the upside, thicker to the downside. also because that we have moved very, very far. And so this is an obvious place for price to maybe have a bit of a rebalance before it figured out what it's going to do. So just keep all of that in mind. So reacting at weekly demand, take this information down to the smaller time frames before you make decisions. So okay, we bounced at weekly demand. Do you want to be selling? Not just yet. So just hold on for a little bit longer and see what happened before you start to sell. If you're going to sell, you might want to look at this move. Here we have 99%, 3%. Want to start looking above the 50% area. Okay, it's still taking a lot of time just to change time frames because the internet is so poor, and I'm also doing back testing the algo, trying to find some interesting parameters. So the computer is running at a full capacity, I'd say, but you can see here at least that the price is looking to move maybe higher from here, at least for the shorter midterm. Swaps are negative as well, so just keep that information in mind. Okay, final words. We're getting on to 40 minutes or so. Yeah, this is reflecting what's happened last week. I mean, our number one job as a trader is to preserve our capital. This is the number one thing that we should be doing all the time. Okay, just like a boxer, he's boxing away there. He knows he's got to go 12 rounds, 10-12 rounds. If he just started slinging like crazy in the first round, I mean, he'd be all used up and he wouldn't make it past the third round. So you have to be very careful that you're not over aggressive and that you preserve your capital. I remember when I started out back in around 2010, I was doing security testing for a national lottery, and the woman I was working with or doing a project for, her husband ran the casino in Copenhagen. And so I went to the casino and speak to this guy, and I asked him, how do you ensure that your casino is winning? And he told me something that I'll never forget. He said that you have to ensure a higher probability of the house winning than people who are coming in to play, and this for him was 3 to 5%. That's all the probability that he was looking for. He wanted a 3 to 5% advantage over those who were playing. And then he said once that is defined, then you just have to keep trading. So after that you need volume, a lot of volume. And so you can compare this to, you have an edge, you have your strategy, your supply and demand trading strategy, which you know wins more time than it doesn't. And then you have to maintain a high volume, which essentially means many trades. And so for him, this 3 to 5% edge would appear after around, I think it's a long time ago, maybe 5,000 spins of the roulette wheel. So he has to make sure that people were in the casino playing roulette. And after about 5,000 spins, the casino started to shine and show about 3 to 5% returns per wheel. Okay, so if he's looking for like a huge win on the third or the fifth spin, I mean, if everyone lost their money in the casino, no one would go to the casino to play. And so essentially he had to make sure that there was a high degree of randomness, so it was equally possible that the house would win, but also that the people coming to play would also win. So that was a fair game. After that, he ensured that there was a slight edge for the casino to win, and then he had to make sure that people were in there. And he said every time somebody won in the casino, they would get super thrilled because that would encourage people to come to the casino to play. Okay, this is the exact same thing here, where essentially we try to become the casino, and we just have to keep the wheel spinning. So if you transfer this directly over to trading, if you incur 3 losses in a row so that you're a little bit nervous about putting on the next trade, that would be the same as a casino saying, oh wow, we just had a big payout, let's not allow the customer to spin the wheel next time because we might lose. If they did that, they would definitely lose. So even in the face of 3 or 5 losses in a row, you've got to keep the wheel spinning. Okay, you got to keep doing it. Keep doing what you know probabilistically should work, and then you'll be just fine. Okay, cool. And so here, if you look at this now, we're on the daily chart. If we mark off where has price retraced to, ooh, we have all of this mess. Boom, right there. price left, we had a pullback, and then price has not been back to that area here. So the 36.65 is an interesting level. We have a little tiny area in here. We have another one here which I really like. I like this one a lot. Why? Because it's just one of those power levels. You know, so price came down, accumulated, and then like boom, boom, boom. And so after price left here, we formed another one, and then price created a micro level, and then it left. Okay, so this is a nice area here. And so you could be buying, but you have to go to the smaller time frames here to find clarity. You almost don't dare changing the time frames because it takes so long. Oh wow, surprise. And so I mean, there's nothing really in here just yet on this time frame. Go to the smaller time frame. There's no supply here. Okay, so if we have a look here, we want price to move above this. Once price has moved above this here, then it shows us that we've taken out all the supply of this area here, and so price will have an easier likelihood of moving through all of this, which is nothing. We have a little bit here. We want price to move above this. Once this has happened, then we can start to buy demand, knowing that price has been down and tested weekly demand down here. Okay. So once price moves above this, you can start to buy. Keep in mind we have a daily area of supply here, but the real reactions probably aren't going to happen until we get up to here and to here. This is also a pretty nice area here. I like this one. This is at the 3350-ish area. I like that very much. Just that one, like a very nice kind of rally, accumulation, dump. Price hasn't been back, so I like that. Yeah. So that's what we have. But again, our priority is to ensure that we can preserve our capital. So no loading the boat. No, wow, this trade looks great. I'm gonna take on 5 or 10% on this, and I'm not going to use a stop. Oh, what a great idea, right? Can you see how bad of an idea that is? I mean, if you never know. Number one, you never know what's going to happen, and luckily, you don't have to know what's going to happen in order to make money. Number two, if you take on 5 times the risk that you normally do, I mean, price has to move 5 times less in order to, to do a huge bit of damage to your account. So you have to keep all of these things in mind. Okay, good. Well, I'm not going to ramble on too much. We've been going on for plenty. I'm just going to see if this thing can upload today, so it should be out a little bit later on. If you have any questions, please send them in through the chat forum. And if you guys aren't familiar with the chat room, I really encourage you to come and have a look. It's a really good place. We have a bunch of guys in there. I don't know how many we have. We have maybe 300 or so guys in here. Internet's just working a little bit for me, but here we have a lot of questions. And as a member, I mean, you have access to all of these forums here. This is for pause users. This will be for Pipnotic subscribers in the near future. Then we have the general and the algo trading, which is for everyone to ask questions. And so come in here. There's a lot of discussions going on. It's all very interesting. There are a lot of really clever people in there, and I'll be in there, as will Volker, to help out with any questions that you have. But if you haven't been in here yet, please do get in there, which you can do by going to the main menu on the Pipnotic website, and under the discretionary trading link there will be communication. You go on the communication page, then you can see like a small chat widget. And then you click on the connect button, and then it'll guide you through the process of logging on. I know a lot of you aren't in there, and you should really be in there because it's a very cool place to meet other Pipnotic subscribers and have a chit chat about trade ideas. And it's a really nice, open learning place. And so there's nothing, you can ask any question you want in there, and it's just a really nice, safe environment to exchange trading ideas. Good. Well, I'll leave it at that for now. If you have any questions, please chuck them into the chat, and I'll get to those as soon as I possibly can. Thank you so much for watching, and again, very, very happy New Year to you all. Thanks for watching.